Hello friends, welcome to my channel. Friends, as part of this video, I want to discuss that how you can select a good mutual fund which suit your needs. Uh, in a previous video, I have discussed what are mutual funds. So this video I'm dividing into two parts. One is first part it will be talking about uh, how what are different types of mutual funds, and in next part we'll be looking more technically that how to select the right mutual fund for you. So let us first start understanding what are different types of mutual funds. So now mutual funds can invest in different type of markets. They can invest in stock market, which are very risky, and they can also invest in debt market, like they can loan money to banks or big corporates or government, uh, and whatever money you invest. Or a mutual fund can be doing both. It can invest some part of your money in stock market and some part of money in in debt. So uh, and you and your mutual fund manager can have different strategies. So your mutual fund manager can say that, okay, I will only invest in pharma companies, or I will only invest companies who are building infrastructure, like who are building roads, or who are building some railway stations, or something, bridges or something. So there can be different strategies of making a mutual fund, or there can be different strategies behind investment of a mutual fund. So we'll look at very high level broad categories. So now mutual funds can be of equity type. Within equity, mutual funds can be of large cap, mid cap, or small cap. So large cap also means blue chip. So when I say large cap, I mean to say mutual fund manager will invest money only in companies which are very big, like TCS, Infi, or Ashok Leyland, Tata Motors, or Hindustan Unilever, ITC, or companies like that. Uh, in mid cap, it will invest in companies which have market cap more than 10,000 uh, crore rupees, 10,000 crore. And in small cap are the companies who have market cap less than 10,000 crore. So large cap are generally considered very comparatively less risky. They are risky, but comparatively less risky. Mid cap has more risk, and small cap has very high risk. So it is suggested that if you're investing in equity, you should invest for a long time. So when I say long time, I mean to say more than 5 years. If you are investing for less than 5 years, then it may happen that some recession has come when you have invested, or there is suddenly market has gone down because of some reason, and uh, you know uh, you may not get time to recover your money in market. So it is always advised that you should invest money in stock market in for long term. That decreases the probability of occurring a loss, getting a loss. So now mutual funds can be of pharma type, infrastructure type, or any other type. If you feel that certain banking sector also mutual funds you can get very easily. So if you feel that certain sector is going to do very well in near future, then you can opt for a specific sector fund. Mutual funds are also classified based on investment strategy. Like you will see something called value funds in market. Almost every mutual fund house, mutual fund company, in simple words, has uh, value funds. So value funds are the funds in which fund manager looks for companies who are very good, and but their stock price is very low at moment, or companies who are investing heavily on research, and their stock price is low. They are currently not in profit, but they are expected to go in profit in 6 months, 1 year, or 2 years or so. Those kind of funds are called value funds. Every fund house may have different strategies to pick these value funds. You will see a lot of value funds doing very good in stock market, and they're also a very good option to invest. Another type of funds are hybrid funds, where some part of your money goes into stock market and some part of your money goes into in debt market. So now under hybrid funds, you will see balanced fund, conservative funds, moderate funds, aggressive funds, all these kind of funds you will see. So they have a different percentage for uh, you know uh, different percentage for equity and different percentage for debt. If you are more aggressive, you like to take more risk, you can go for aggressive fund. Otherwise you can go for moderate or conservative funds. So generally balanced funds have a strategy of 65% in equity and 35% in debt. So you can choose a fund if you want to take lesser risk as compared to you know uh, pure equity funds. Then there are another type of funds which are called index funds. Index funds. Okay, so before that, I should explain that you know all the funds have some cost, as I told in last video. Um, so if you're getting a profit of 12%, 1 or 2% will be deducted by your fund manager as part of brokerage or expenses, and and the rest will be given to you as a profit. So in normal mutual funds, your fund manager decides where he wants to invest the money. In index funds, whatever companies your Nifty 100 or Sensex is using, uh, all those your fund manager will directly invest money in those companies. There will not be any separate research and all that will be done. So because there is no team to select funds and there is no separate research being done here, the cost of index funds is very low, and exit load is also very low. Even your what do you call that? Uh, uh, your every fund has a duration beyond which, if you withdraw your money, they will not apply any exit load. So uh, that duration, exit load duration is also very low. Some funds will have 3 days of exit load, some funds will have 15 days, some funds will have 45 days. Different funds have different strategy on that. So I am a particularly fan of index funds because the cost is very low, and it is always told in mutual fund industry that all the funds normally tend to go towards average over a long period of time, and it is very difficult to beat the benchmark in for a long duration. The probability of doing that is very low. So generally, I was reading a news article a few days back where they said that 90% of the funds were performing worse than the benchmark this year. This year market has been down, but there can be situations that your funds are not even able to beat your benchmark. Means they are not even, when I say not able to beat benchmark, you can think that they're even performing bad than stock market. Bench like Sensex or Nifty. So investing in index funds can also be a very good strategy. I'll in a different video I'll explain that why you should select index funds in a more detailed way. So I hope this is clear. You are clear that what are the different kind of mutual funds that are available to us. Uh, in next video we will discuss that how you should select a right mutual fund for you. So till then, I hope you enjoyed this video. This video is very useful for you. I hope that. Please share these videos with your friends, who want to get financially literate and want to manage their funds on their own. I will be happy to answer your questions. If you have any, please post them in comment section. Please subscribe to my channel and share the videos with your friend. Thank you.